Good morning, everybody. All right. Well, yesterday was sort of an interesting day, you know, that all the risks that were there in the past were ignored, but if the market is just waiting for the Fed and with no news, it was ignored. And so this 530 level we talked about earlier in the week and last week why it was important. It didn't even get anywhere close. And as we can see, yesterday was just basically more of a technical situation where prices opened up near that prior pivot low. Buyers stepped in, and after a move up toward the resistance area, it just chopped back and forth, back and forth. But buyers didn't give up, and typically that is the case intraday until prices actually break down below yesterday's close, and things are below the prior open. That never happened. Just open day. So as I look at this, price, as you know, prices are down a little bit. I don't know why on my um, 5-minute chart it's not updating tonight this morning pre-market, but whenever we'll look at the futures. Anyway, so the question is this head and shoulders that's forming here foretelling of a move down? I've seen plenty of times where these get ignored, where it pulls back and just heads up again. We'll see. Clearly, the hourly and the weekly chart are still bullish. There's still an uptrends. Now that we made this higher high, this becomes major support where this bottoming tail bar is. If it closes below the 20 MA, that would be a first heads up that something's wrong. I don't suspect that's going to happen today. Just a thought to keep in mind. This little shelf on the hourly chart, which is the bottom of that little head and shoulders there, is a short-term support level. See, it's been holding 3 days now, and it's in the upper part of the wide range bar. So when that wide range bar forms, I mentioned that as part of our just systematic approach, let's see if it stays on a closing basis above the halfway mark, and it's been doing that. Just doing what historically bullish markets do, just staying in that upper half of that wide range bar, and ultimately, it's got to go higher. It can only go sideways for so long. And so this morning, and this isn't updating, but let me look at another chart here, the other system. It's at 534.2. Right. So 4.2, give or take. It's gapping down almost to the low of yesterday's bar, which clearly is a negative start to the day. We'll see if buyers want to step up again in this area or not. So the first, let's say, first 20, 30 minutes or so, buyers will have the ability to try and push it back up again, or to stay in the range, or whether, breaks below this level, which now you know where that is. Just keep an eye on that, below then. Well, that 5,300, 530 area comes into play. We'll see how that shapes up. SPX, get this out of the way quickly. Yesterday, prices weren't touched, even coming close, since it was just an inside day. Is it not right to retrace to the down move? Is it not right? I'm not sure what you're asking. Anything, prices can do anything, but is it not right to retrace down there? Well, it's fine to retrace down there. That's part of on the right shoulder, isn't the right shoulder retrace to the down move? Look, I don't like getting caught up in exactness of things, but in a general, what patterns do. Shoulders, the right shoulder is lower, obviously, than the head. A lot of times it's lower than the left shoulder. showing a little extra weakness. It doesn't have to be exact. So many times we all get too connected to exact things that we've seen from the past, and it doesn't have to be exact. So staying with a general observation of, is this two shoulders and a head? Yeah. And is this a neckline where it held that area? Yeah. So sometimes we know that these things follow through, and does it break down through here on a closing basis? End of discussion. It should go down to the next support. Sometimes it retraces down there and it looks ominous, like it's going to go down there, and it flips back up and it takes off, aggressively to the upside because the pattern begins to fail. This pattern on this time frame signals distribution, plain and simple. It's going sideways. Now, distribution can happen in a movement like this. It could happen in a relatively tight back and forth movement. And you say, well, isn't that bullish? Well, yes, it's more bullish than this displays erratic or uncertain behavior. Whereas a tight consolidation is just that after an up move. But in either situation, if it breaks below the bottom of the base, it creates a situation of, in an uptrend going sideways. Well, maybe that shouldn't have happened. Whereas the head and shoulders implies a greater degree of it happening, but it still has to happen. Whereas if it's going sideways and tight, it displays more confidence in the uptrend. But if it breaks below that, it's a disappointment that the uptrend didn't continue. So just mark off the support level and see if it goes down there and breaks below it or not. Keep it simple, stupid, as the saying goes. All right. So Robert's saying, if this, then that, right? We all want black and white because that's how we had part of this discussion in the green room yesterday about, certainty and things being, the same every time, because, the majority of things that we do on a day-to-day basis in other professions are that way. 2 and 2 equals 4, right? Black and white. Versus in the market, well, 2 and 2 today equals, 3, or maybe it'll be 5. So it doesn't sit well with us, but that's what makes what we do more difficult. And it's just like, okay, this is a probability game. And so until the probabilities are in your favor, stand aside. Okay. So 5,300 today, actually things come up a little bit, like 5,305. Yesterday I said, hey, the strike was below 5,300. That's going to be the best scenario situation, since the strike was below that whole number. So now it came up a little bit. This came up a little bit. And where things are right now, not quite in the middle of the range. And things are coming up a little bit, not too much. 534.2. So a little bit. I still, down below here, you're going to have the support. It's got to, if breaking below here, it does open up the door to coming down here. So, but still, to get down there, there's going to be support. As always, give it a little time, see which way it's going to wiggle. NQs, similar pattern. Don't have that head and shoulders relatively tight, but you can see the whippy price action up and down, up and down. Even pre-market, things are down here a little bit, holding this low. Just erratic price action. The Dow, much more convincing, held up quite well yesterday. But now we've got this topping tail bar, which was there obviously yesterday, but prices refused to decline. And, things went up. Yesterday was just an up day, regardless of interest rates being up and the dollar being up and oil being up. And that's why I said, is this a disconnect? Maybe it is. Or is it just complacency where, over the last couple of years, that scenario would have drove the market lower. Yet yesterday it was like, who cares? Oil's up. Who cares about inflation? Whatever. Nobody's going to say anything until Wednesday as far as, news. So, trend is up on those time frames and semiconductors are up, and so even the weak market was higher. And here's the wide range bar up. Yesterday I mentioned, sell setups after a wide range bar tend not to be high probabilities. But now we've got the start of another day here and a very, obvious support level. And so breaking below there opens up the door, right, to at least down here. So for intraday trading, that would be okay. Maybe it gets worse than that. We'll have to see. I don't think it would, go down. I don't think, thinking sometimes is a problem. Just follow the charts. But I don't think it would go down much more than that bottoming tail bar right there, give or take. But this breaking here would give us a shorting opportunity intraday. Even the Russell, which was obviously the weaker and wide range bar here, breaking down below that pivot, it wouldn't go down yesterday. And we'll take a peek. Why wouldn't it go down? But regionals were weak, but it was just basically buy anything. It's going to go up yesterday. And so we got a bottoming tail bar, and as you can see, now prices are about halfway down that bottoming tail bar. So more selling this morning. So yesterday, regional banks were down and they began to stabilize. So as these are moving up, that helps support the Russell. And I have biotech in here. They were all over the place, but I'm not so sure, about this yet. But we've got a trading range. This wide range bar last week was right into resistance, and the same situation. Doesn't matter what we're trading. Wide range bar. Keep the closing prices in the upper 50%, and it breaks below the wide range bar. However, look at yesterday's low, and you can see this congestion right there, the 50 MA. Buyers step up, and while it was erratic, even went up higher at the end of the day. So this might be in what I refer to as a development mode. Maybe eventually it breaks out. It's too early to tell, but it's just erratic. But that went up yesterday. Eventually the regional banks went up, and oil was kind of, was up. It doesn't look like much of anything on a daily chart, but you can see early in the day that was moving up. So with those three, moving up or grinding up, it's going to be very difficult, if not impossible, to break IWM on an intraday basis. Transports even had a pretty good day yesterday. It's just been a big giant mess, but that was up on the day yesterday. So it was almost like as if throwing a dart. Yesterday the long side was working in light of interest rates started higher. Maybe if they would have continued to go higher, and then probably if they would have pushed up above 4.5%, I think the market would have said, hold on there. Something's really wrong. But they just kind of hung there all day, but they didn't go down. So that was ignored. The dollar, it's up here again. Moving higher. The markets are down a little bit, but that was up there yesterday near resistance. So maybe it was more of interest rates in the dollar couldn't get through any resistance. They just hung there. There was no news coming. Just buyers just continued. There really wasn't that intermarket risk as it obviously was first thing in the morning, and it didn't follow through. Crude oil was up yesterday, right? In a pretty big way. Nobody cared. It's up at resistance. What is it going to do? Well, clearly when prices break down, the highest probability breakdowns don't retrace this far. It's into a mess here. Saying, so let me in here on YouTube here that about the VIX moving up, or SVXY. Well, that's the futures. Again, a disconnect. Things up. Why is this going up? Is this the one you wanted me to look at? Anyway, let me just I pay attention more to just the volatility index here. So, that was moving up. So sometimes the VIX, everything was just out of sync. Markets went up, and the things that were pointing toward, hey, be careful. Even the AD line was terrible yesterday. Who cared? Nobody cared. Look at it. So all the warnings that were there, the markets could care less yesterday. And it is what it is. Bitcoin, coming, it had got through resistance, and now it's coming back down to support at this congestion area. So ideally, this pattern of this move up and this little pullback would have continued, but it can't. And sometimes buyers just get tired and they give it up, and we'll see if they want to step up here and if it can flip it back up again. And again, no advantage here at the moment. And keep an eye on semis. Strongest thing out there. How high can it go before it corrects? Nobody knows. You can see all of these lows are close to equal. So, and yesterday being a range expansion bar, big green bar closing at the high, that becomes a critical level. So breaking below that would clearly be super bearish, right? In the short term anyway. I mean, the trend is still up, but going sideways like that, closing below that low would be bearish. So we'll see. We're saying, but the breadth more neutral should the trend continue. Well, the breadth gives you okay, what kind of day are we dealing with? And breadth moves up and down during the day. More of a indication of neutrality and the trend continuing is the tick. And we've talked about this many times in the green room. It's like when the tick is just going back and forth like this in a neutral way, no extremes. And this is something new. Years ago, it wasn't this way. Years ago, it would be an erratic day all day long versus, trend and then holding on to the trend. Whereas over the last, I don't know, year or so, year and a half, we've been talking about this in the green room, when you get these neutral tick days, the trend has a higher probability of continuing. So that's a much better indication recently, and things change. Whereas, the AD line was way negative and just slowly creeped its way toward neutral. I talked long enough. All yours, Dan.
Good morning. Talking is good. Yeah, I think we're just gonna be a range bound little mess here till Fed Day tomorrow. Greg, the screen's not switching over, it's trying, but
I see your screen, Dan. I think because I have this on, we can both share
okay.
at the same time. Change it to one.
No, that's fine as long as you do. All right. We don't have many earnings. The tail end. Let's see what alarms. What's on my interest list? All right, GM. We bought this yesterday as a core long. It's gapping up. So I'm going to be looking to sell Friday call options. You know, that's a very bullish 15-minute chart, but you know, that's a monster move in a short period. So that's what I'll be watching there. Looking to a covered call. Iron. I had an alarm go off, but I don't see any prints. It's a 1, 2, 3. Intel alarm went off, but I think that was premature. Let me just reset it. This is such a dog of the. I mean, it's sad. This used to be a top trading stock in the 90s. The leader. And it got left behind in competition. SPX we also bought yesterday. 1, 2, 3. Looks great. So then IWM we shorted yesterday on the bounce. It's gapping down here. And that's it on my alarms going off. Here's a couple earnings. Bearish gap, downtrend, daily, weekly, monthly. That thing's in trouble. Gapping up 2863, bullish gap, but too big, nothing to do with it. ASO 51 will come back, no pattern. And okay, this might be interesting. I said yesterday, recent IPO, and it's gapping up. Let's put that in a window right here. Zulu Kilo. Yeah, we did a put spread on Fizzler. Yeah, I saw it was up a little, but we're fine there. And Lilum, it's an over the counter stock. I mean, 30-minute high, but I don't see a big target in that. It's garbage. This CXW, bottom right, is it's not earnings, but it's gapping down on losing a contract with the government, having to do something with all the illegals coming over. Same with Tango Hotel, they're losing a big contract. So let's watch both of these for dead cat bounces. Let's see. RDNT, I like. I love, look, that's a wide range igniting, and I got a 3 inside bars that stay in the upper 40%. That's bullish. As Greg was talking, I just saw a firm here taking off. I have no clue why, nor do I care. But put spread candidate, AMRX. All right, these are a couple that Aichi mentioned. Let me get to Apple first. Apple had their developers conference yesterday. Looks like a big fat nothing to disappointment. They were all looking forward to some positive AI news. They announced, I think, some deal with this. I think is this the company they did a deal with? AI, Chat GPT, but that's a bullish rising wedge. Looks higher. Goog. What? They were in the news of some sort, or no, this was on Aichi's list. I'm don't not crazy about that. Aichi. No great pattern. I like your AMRX though. This I like. I'll put it in the window. Let's see what it does in the first 30 minutes. ITRI. I show it gapping down $8. Not sure if you saw that or if it's real. GCOS, too sloppy. WDC, yeah, it's a cousin cousin of STX, which we bought yesterday. I like this one a whole lot better. But yeah, it might play catch up. TME, not crazy about it all. There's no pattern, long or short, really. TIVA, I'll set an alarm right here, 1685. Particularly because of the gap down. Let's see if it can recover. I noticed a lot of these Bitcoin ETFs gapping down here today. I look at IBIT, GBTC. So let's scan all those. We might get some call spreads. FTNT, I think they were in the news of buying a company, but it's a big bottoming pattern. So I got an alarm up there at 6020. Rocket Lab, I just saw going by the ticker, so I looked at it. Now it's a big old trading range, kind of a rectangle if you measure from this pivot low over here. And so I always look at bigger time frames. And it's not a core long, but there's definite bottoming action in all time frames, and it could turn out to be a home run entry on this monthly. So I'm going to watch this, no rush. Ideally, get a 1, 2, 3, 4. HCA we bought yesterday, looks great. And then UHS is a cousin. I have an alarm at 189. This would be a great 30-minute high if it opens flat. Zim. I don't know what the news is. It's not earnings, but that's an ugly gap. So let's watch this for a call spread, 15-minute low. EMN, Alex mentioned is a 1, 2, 3, but it's not a harm. It's not ideal because of the run from here to here. It is bullish weekly, monthly. I'll keep it on the list. I would like to see another inside bar or two, particularly with Fed coming up. Iron, I have an alarm. 3980. Let me reset it. Yeah, I already have an alarm there. All right, Q's holding and the other three horsemen accelerating lower at the open. Let's just say hypothetically we close right here. Then this is a sloppy bear flag, right? Here's my counter trend 30-degree. I got my 3-bar reversal. And now it's trading under a prior bar's low. Now it's a weird void with these overlapping bars, but as of right now, that's bearish on the diamonds. Charlie, yeah, Alex has been watching this for a while. And I actually took it off my list with yesterday's bottoming tail, but yeah, nice void. That's a 5-minute low trade. Stop over this 15 minutes, stop over 6150. I'll put that in the window.
XLF is also picking down too.
What?
XLF is also moving lower, so the sector, and that's a weaker one within it.
Okay, GM is on the calls. GM is a go at 25. So F, yeah. KD shorted. Yeah. IWM low alarm. Nice. Z Lab. That was a long. Wow, Z Lab is um is that an early alarm? 2018? Yeah, it is early. Wait, did it trigger yesterday? Tiva up alarm. Z Lab over 2006. So yeah, this actually triggered yesterday, 2007, Z Lab. All right, I don't know why I didn't.
Yeah, CRM, maybe call spread, but that's starting to break a little support. 3 days sideways.
Sure, just it's not real potent. So my only hesitancy is the Fed volatility. Let me check the juice bar. 245 or higher. $5 wide, 73 cents, 245, but that's too tight because the stop has to be there. And then the higher ones are spready and no juice. TSLT, Tesla stopping out finally. We've been in this levered thing for a while. And we got to stay. Tesla's now fighting with Apple over this AI thing. Tesla's just too much in the news, so let's stay away from him. But let's see, we only did a half lot, so that cuts our loss in half. Didn't okay. All right, looks like a short now, Tesla. All right, Intel alarm, but I'm still not doing anything. I'll set it another nickel higher. I'll set it 30.95. Macy's slow alarm. We did a put spread yesterday. Yeah, Citigroup falling nicely. So yeah, depended on how aggressive you got in, but looked good. Block, low alarm. Greg, I had a break even, just FYI, alarm. So block, we're back to break even right here in the ETF letter.
Still an uptrend.
No, no, just FYI.
Boeing, maybe call spread down. Mentioned it the other day. Now it's reversal day yesterday and moving lower.
Let's see how far we can get. 195 would be ideal. 192.50, $5 wide. Is 64 cents. Um, yeah, I can do that. Knee. Yeah, green bar ignored breakdown of small head and shoulders. It's extended pre-market. And this one, you get this big old bar here, but it looks like just a slow chugger lower. Obvious target was 50. And I like your stop here is better. So no-brainer stop over this 15-minute pivot yesterday. Oh, this already